Hey, what's up everyone? Welcome back to another Elliott Wave analysis for Bitcoin. This is going to be another follow-up to our previous video since many have asked for it. So please, once again, if you are interested in more of these Bitcoin video updates, it seems like everyone's more interested in the XRP video updates, please make sure to hit that thumbs up and also subscribe to the channel if you haven't already. Now going straight into the technicals, in our previous video, we did discuss two possible options for how this correction could play out, both achieving the same results here, ladies and gentlemen. When it comes to the actual correction depth, we were looking for our final wave Y if this was a double zigzag, which is currently the case as a WXY, or a wave C at a later stage of a flat to meet us in the 90K regions as well. Now, in real-time analysis, it's of course all based on probabilities in the terms of the overall direction when it comes to the medium time frames. But in terms of the overall context on the macro of the preceding waves, now that's what I always emphasize here, ladies and gentlemen, the preceding waves. We knew that this was in a wave 2 of some sort. So with that being said, there is a very strong contender right now as we speak of the correction actually being complete here. And lo and behold, the timing of it couldn't be any more perfect, especially with the geopolitical issues now coming to a possible pause. This could possibly give the markets a window of opportunity to continue this bullish move to the upside. There's really no other way to put it. Now, I won't go too in-depth in the micro timeframes for this video, as that is reserved for the Patreon and Discord memberships. So if you are interested in wanting to join and get more further in-depth updates, please use any of the links in the description below. So like I said, I do think that the recent move up that we had right here, most likely as an impulse, it gives us the possibility of this correction being complete entirely. It would be a very strong anomaly if this wasn't a bottom right here for this wave C where it's marked, because at this point in real-time analysis, it is pretty hard to find a high probable bear scenario just due to this big follow-up that we had. And remember, our narrative and focus was getting down to the levels and finding some kind of reaction in this major box that we were looking for. Now it's all going to be about the follow-up. Are we going to get a wave 1-2 pullback now at a later stage? Really doesn't matter, because the overall context of it is that this larger corrective move is now most likely complete. Now there are a lot of market inefficiencies existing on the micro time frames, but you want to be focusing on the overall picture, because the Elliott Wave Theory has time after time proven to be forgiving if you focus on the top-down analysis with at least 3 degrees of hierarchy as the primary focus on a larger time frame like we do here on the 4-hour and the daily chart. That's not my approach. That's more of the Elliott Wave International approach. So when I was getting certified, we always wanted to make sure to focus on at least 3 degrees of hierarchy without focusing too much on the micro time frames, but at least have the right context of everything. Because right now this does look kind of odd when it comes to the actual zoomed in perspective, but right now this does look like an ABC with the C wave as an expanding diagonal of some sort. We have an ABC going into here. We had a leading diagonal into wave A, B, and then C. Great symmetry in this regard. Our wave X was quite short in time, but overall we do have time as well being met, and also the correction depth of this 100% level being met when using the Fibonacci trend extension. You want to use the pivot or the origin of wave W, the termination or the beginning of wave W, the termination of W, that is, and then this wave X termination point, and that gives you the projected target of this level here, and that's exactly where we got. And we're now lying at a very I would say important level of Fibonacci level. It's not really a golden Fibonacci level at that 61.8%, but we are in a macro wave 5. We want these wave 2s to be shallow as possible, because we are looking for extended wave 3s as much as we can to continue that overall bullish narrative. Now, how does this fit into that overall narrative? But like I said, it doesn't really matter, because it is still following that same path that we have been talking about on the macro for many months. We were looking for some kind of extended fifth wave to the upside, and lo and behold, we are still just, this correction alone was a blimp within the galaxy, ladies and gentlemen. As you can see, you know, it may seem like a forever kind of timeline when it comes to the zoomed in perspective, but look, we're just creating what is going to be a wave 1-2 of an extended wave 3 of the intermediate degree on the macro. And then we should get a sideways wave 4, because wave 1-2 was sharp, and we did get a triple zigzag for that. And then we should be looking for that fifth wave to end this entire bull market around the $200,000 to the $300,000 levels. That's kind of my overall target. I know a lot of bulls are looking for these levels here, but I can't really find a good possible finishing move here unless you're looking for a diagonal of some sort. I don't know. We'll have to see. But in my opinion, I think that we're going to be looking for these levels overall. I think bulls are going to be wrong, and I think the bears are also going to be wrong. So I think that with everything in mind, this is really the only way to achieve this bull market ending. And there's a few pieces of evidence that I discussed in previous videos on why I do think that we're going to be seeing these levels. First of all, especially with the halving cycle theory in mind, we don't have the necessary achieved slope to the upside. If you look at every single past cycle, we've seen a parabolic slope that happened more or less after the actual cycle having happened, and then we saw a very strong push to the upside before we went to an extended bear market. And because of that, I don't think that it's going to be coming earlier. I think that's going to come at a later stage. I think we will follow or more or less respect the overall timing of it. But the only way to achieve that right now at this point, since this wave 3, usually you'll have wave 3 and 4 and 5 happen after the halving, but we had this wave 3 catch everyone off guard, and I think a lot of bulls missed out on this move over here, and I don't think that they're ready to sell off here as well. I think they're ready to sell off at a higher level, and that is herd psychology at best, basically. So I do think that we are going to be working for higher levels, ladies and gentlemen. And to summarize this, again, I do think that we are looking for higher levels on the medium time frame as well. This does look like a possible contender to being complete. Whether we do get a healthy 1-2 pullback, that's all going to be part of the picture, in my opinion. But remember, everything is important when it comes to risk management. We want to be looking for some kind of wave 1-2 for actually positioning ourselves and maximizing our positions when it comes to risk management. So this protected low at the $98,000 levels. Let's see if it does get supported. Maybe things will change, and I currently don't want to talk about a bearish scenario right now because it's kind of forced at this point. So it's still working in our overall context of narrative scenarios. This WXY now, with everything adjusted in hindsight, this is how I would look at it. I think that we have achieved overall symmetry, geometry, and overall timing of it. W and Y is also equal in length. We also came down and retested the major Fibonacci levels on the macro of a extended fifth wave. You want these 1-2s to be shallow as possible. So this is considered a proper depth when it comes to this wave 1-2. So hopefully that was helpful. Thank you very much. I will see you guys in the next video. So please make sure to hit that thumbs up, subscribe to the channel if you haven't already. Remember, we do offer more in-depth analysis on how the micro time frames are playing out in the Discord and also on the Patreon membership. So please do use any of the links in the description below. Thank you very much. I'll see you guys in the next video. Have a fantastic rest of the week. Bye-bye.